Back to another video. We're going to take a look at the Usdzar. I'll give you a full detailed breakdown on a fundamental technical order flow and a sentiment perspective. And we're going to look for the best probability on the Usdzar and how we can take this next opportunity to trade it. Now we're going to start with the technical analysis. So starting on the monthly time frame, what do we have? Now firstly we can see how the market had printed this overextended W formation. Now after an overextended W formation, you expect a pullback to the left leg before the continuation as well. We can also see how the market printed this massive impulse and the correction. Now if you want to measure that correction, you just take your Fibonacci there from the low to the high. I can see how the market is about to test the 61.8, which is known as the golden ratio. But the only problem that we are faced with at the moment from a technical perspective is this was a very strong level of resistance and the market had tested that level quite aggressively multiple times. The market finally broke above that level. Now you can see how the market is about to break below that level as well. But this is a monthly candle, so there is a big possibility that the market could still close above this level as well. Now looking at the weekly time frame, what do we have? Now, from a weekly perspective, we can see over here how the market had printed this information, went up, tested the neckline, and as you know, when the market prints an information, you expect to pull back to the neckline before the continuation to the downside there as well. Now, what we have to keep in mind over here is we can see how the market is approaching this very strong structure. Now, the market had tested this level of support in the market once and had rejected it quite aggressively. So there is a good possibility for the market to continue lower before potentially going higher again as well. Now here on the daily time frame, what do we have? Now from a daily perspective, we can clearly see how the market had broken below this structure level over here. Now this level in the market acted as a level of support. Support got broken and the market tested, rejected it as a level of resistance. But now we have to keep in mind that the market is also testing this level over here. Now, first thing is that this level was acting as support, got broken, became resistance. Now the market is testing support and we've got resistance over there. So the market is stuck within this consolidation phase from a daily perspective. Now until we get a clear breakout on either side, only then we'll be able to look for an opportunity to either look for a buy or for a selling opportunity in this market as well. Now, if we go and look at the sentiment data, the order flow data, so the commitment of traders. So this tells us what the big banks, hedge funds, and institutions are doing in the market. And if you look at the data, the last week's data for the for the ZAR, we can see based off last week's report how hedge funds they came in and they added 4,727 longs. They also added 4,242 short positions, but we can see how the overall net positions had increased from 2,820 to 3,299. So there's a good possibility for the ZAR to get stronger in the short term there as well. Now there's two things that we need to look out for. We've got the South African unemployment rate that's coming out, and we can see here the unemployment rate has not been doing that good. It says here from Trade Economics, it says South Africa's unemployment rate rose to 34.9 in the third quarter, up from 34.4 in the previous period. It was the highest job loss rate since a comparable data began in 2008 on the back of July unrest and the still strengthened lockdown. Now we know that during the pandemic phase, a lot of people had lost their jobs because companies were not able to sustain them or to pay their salaries. So as a result of that, they had to be let go, and that was mostly in the tourism sector because there was literally no jobs, no jobs available in that particular sector because people were not allowed to travel there as well. Now it says here the number of unemployed persons fell by 183,000 to 7.6 million, but the employment slumped by 660,000 to 14.2 million, and the labor force plunged by 842,000. Now we all know that South Africa is not, in the state that the economy is in at the moment. Job creation is not that easy, and we all know it's not that. Also, it's not that easy to find a job, especially with a lot of the restrictions that are still in place. And not just that, because a lot of companies had to close their doors because of the loss of revenue And most of the companies that had employed the people might be out of business, or they don't have money to just come back and open their shops again. So this is going to take a while. So we also know that Cyril Ramaphosa, which is the president for South Africa, he came out during the SONA and he said a couple of things over there. Um, he said that last year the unemployment rate reached the highest recorded level. Unemployment has been caused by low growth, which has in turn resulted from a long-term decline in investment. Was also talked about that the government does not create jobs, and that they've been taking extraordinary measures to enable businesses to grow and create jobs alongside expanded public employment and social protection. We all know that the government does not create jobs there as well. It says that businesses create jobs. Around 80% of all people employed in South Africa are employed in the private sector. So basically, he's referring to, or you know, like I'm referring to, 80% of the people that is employed in South Africa is in the private sector. So it's a lot of personal companies that is creating the jobs as opposed to within the government sector. And if you're going to tell me that you need a qualification to be working in the government, then we're probably going to have an argument on a different basis there as well. Apart from that, we also have the electricity crisis. We know that several new energy generation projects, so this is all big problem with Eskom, with the load setting, and this obviously negatively impact the businesses as well. And he said that several new energy generation projects will be coming online over the next few years. The same promise, and we know that that thing has been coming on now for a very long time. Now, there's a lot of stuff that still needs to be fixed in this country, which is South Africa. But the most important data that we need to look out for, that's also going to come out on the 22nd of February, which is the South Africa's unemployment rate, which is going to be the key factor that's going to contribute towards the overall long-term momentum of the USDZAR as well. But we are retail traders and we're looking for short-term opportunities there as well. This article from CNB says Goldman Sachs, says the US dollar could see moderate weakness over the course of this year. Now, it's not rocket science to understand why, because we know that there's a lot of things that needs to be fixed in the US dollar, and there's a lot of things that I've been speaking about over and over and over again. Inflation is sky high. The only problem that I've got with the fact that they say that it could weaken the dollar in the over the course of the year is that high interest rates is expected, more than anticipated, which is very attractive for investors as well. Consumer debt went up to 50 trillion, which is quite a problem, allowing people to, just so that there's a lot of people that are stuck in debt, and with the increase in interest rates, it's just going to impact the consumers even more, to a point where they will just be able to pay for their houses and their cars and for food on a day-to-day basis. Because if you hike interest rates on current debt, that means they just need to fork out more money. The other problem that we got also is the tension between Russia and the Ukraine. If the fuel prices hits over $100 a barrel, and I believe that the fuel in the US is now about $3 to $4 per liter of fuel, then um, then then that's also going to impact them, because then that means the prices of fuel is also going to increase in the US, meaning that they need to fork out more for fuel, and the consumers will just be hit even more. So apart from the interest rate hikes that they need to deal with, apart from the 15 trillion debt that those consumers are in due to the time that there was no interest rates and people were encouraged to go and borrow, um, they've also got to worry about the gas stations or the fuel prices that's going to increase as well. And the problem with that is that when less people spend money, big companies doesn't make money, and that ultimately leads to job loss as well, because the company's revenue is depending on consumer spending, and consumers are not spending, and that just means one thing. Now, the way that we are going to approach the situation on the USDZAR, so we have to be reactive and not predictive. But before we get there, let's look at the sentiment data, ladies and gentlemen. Now you can see here, based off the last data that we've gathered over here from my FX book, it says here we got 17% of retail traders selling the USD ZAR, and we got 83% of retail traders buying the ZAR. Now, I always say that you want to be on the opposite side of what's going on over here. Now, the best way to approach the situation is to wait for the market to close below this level and then on the retest, because this level is currently acting as a level of support. Now we're going to wait for support to get broken, and then on the retest we're going to start looking for selling opportunities for the market to complete this information, as well as for this market to complete its impulse correction and impulse pattern, and also for the market to break this level of support that would then be turned resistance as well. Now, when I talk about waiting for a clear rate, I'm talking about a candle, a daily candle that closes below that level. I'm not talking about a candle with a wick that's dancing over here like Michael Jackson, because you can see over here, this is basically what happens if you don't wait for the daily candle to close. Because this again was just a liquidity grab over here. So wait for a candle, a daily candle, to close below this level of support. Then you wait for the market to pull back. Then on the retest, I can then start looking for selling opportunities in the market as well. We also know that we've got some retail sales for the US dollar coming out this week as well. So that's also just something that we need to look out for. So based off where we are now, we can definitely expect the USDR to just continue downwards in the short term from there as well. Now, as always, if you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below what you want me to cover in the next video. And thank you for everyone that has been taking out the time to watch the video. And as always, cheers for ears.